Why 99% of business owners overpay taxes. This is the scaling solution. Hey, I'm David White, and I'm about to share something that might make you a little angry. Most business owners, probably including you, are writing bigger checks to the tax authorities than they need to. And the faster you grow, the more you overpay. After 4 decades of building businesses from electronic startups to marketing ventures, I've watched countless entrepreneurs make the same expensive mistake. They treat tax planning like dental work, something you avoid until the pain becomes unbearable. I get it. But here's what successful CEOs know that others don't. Every business decision has tax implications, and smart leaders make those implications work in their favor. So let's talk about strategic tax architecture. Today, I'm going to show you how to transform tax planning from a reactive burden into a proactive competitive advantage, one that scales with your business and puts more profits where they belong, in your pocket. Let me start with the biggest lie in business, that paying more taxes means you're more successful. Most business owners operate in what I call compliance mode. They earn money, their accountant tells them what they owe, and they write the check. It's like driving cross-country using only the rear-view mirror. You might eventually reach your destination, but you'll miss every opportunity along the way. I learned this lesson the hard way. While running a telephone marketing business generating leads for Lloyds Bank and Ernst & Young, I was so focused on revenue growth that I treated tax as an afterthought. As a result, I handed over nearly 40% more to the authorities than necessary, simply because I hadn't structured my business with tax efficiency in mind. Warren Buffett said it best. Someone's sitting in the shade today because someone planted a tree a long time ago. Tax planning works the same way. The shade you need during rapid growth must be planted well before you need it. So let's talk about an architecture. The transformation came when I started thinking like an architect instead of a tenant. Smart CEOs don't just occupy their business structure, they design it. They understand that strategic tax architecture isn't about avoiding taxes. It's about building efficiency into every business decision. Benjamin Franklin wisely noted, an investment in knowledge pays the best interest, especially when that knowledge can legally reduce your tax burden by 20 to 30%. So here's the 5-step system. It's a systematic approach that transforms tax planning from reactive compliance to proactive optimization. Step 1. Conduct a tax foundation audit. Your current tax situation is like a house foundation. You need to know what you're building on before adding floors. Most business owners have never systematically analyzed their tax position. They know what they pay, but they don't understand why they pay it or how it could be different. Step 2. Implement growth phase tax mapping. Business growth without tax planning is like accelerating toward a cliff. Different growth phases require different tax strategies. Map your business growth timeline against optimal tax strategies for each phase. If you're planning to scale from 2 to 10 million over 3 years, your tax architecture should anticipate that growth, not react to it. Step 3, optimize your business structure. As JP Getty observed, my formula for success is rise early, work late, and strike oil. But even oil discoveries need proper corporate structure to maximize value. Entity optimization is where most businesses leave serious money on the table. The company that worked perfectly for your startup might be costing you 15 to 20% more in taxes now that you're profitable. 4. Master strategic timing implementation. Timing in tax planning is like timing in comedy. Everything depends on when you deliver the punchline. The tax code rewards those who understand timing. The same business transaction can have dramatically different tax implications depending on when it occurs. Step 5, build a quarterly review system. The most expensive words in tax planning are, I wish I'd known that earlier. Tax optimization isn't an annual event. It's an ongoing business discipline. Quarterly reviews ensure your tax strategy evolves with your business reality. Look, I've been where you are. I've made the same expensive mistakes, so you don't have to. The difference between business owners who overpay and those who optimize isn't luck or connections. It's understanding that tax efficiency can be a competitive advantage when done correctly. Remember, this isn't about creative accounting or aggressive schemes. It's about making the tax code work for your business instead of against it. If you found this valuable, there's more where this came from. Subscribe for more strategic business insights that can save you thousands and help you scale more efficiently. And remember, always consult with qualified tax professionals for advice specific to your situation. Your circumstances will differ significantly from what I've described here. I'm David White. Thanks for watching, and I'll see you in the next one.